Hey everyone, Tesla is set to report earnings after the markets close on Tuesday, April 2023, and with the stock price already down 40% year to date, investors are asking if they should buy Tesla stock before it releases earnings. I'll answer that question in this video, so come along and let me share with you the information I'm looking at to make that decision.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so I already mentioned that Tesla's posting earnings April 23rd. 2024, and one of the main things investors already know is its production and delivery numbers. Tesla produced 433,000 vehicles and delivered 386,000 vehicles for the first quarter of 2024. Notably, those numbers are lower than the production numbers and delivery numbers from the same quarter the prior year. More importantly, deliveries were 422,875 in the same quarter last year, and they're only 386,810 in the same quarter this year. There's a much larger gap between production and delivery numbers in the first quarter of 2024 versus the first quarter of 2023. However, that's not going to impact its earnings per share, and here's why. When a company makes inventory, it's a cash transaction. Cash leaves the company for materials and labor, etc., to build the car, and the car sits on the company's balance sheet as inventory. It doesn't go on as cost of goods sold. It only gets recorded in the income statement as cost of goods sold when they make a sale. So as long as this inventory isn't sold in the quarter, it won't get recorded in the income statement as a cost. So it won't show up on the income statement versus income, revenue minus expenses to demonstrate profitability. These inventories will show up likely in the next quarter when Tesla eventually sells these cars. Then that expense will show up as a cost of goods sold. Inventory is only accounted for on the income statement once they are sold as an expense. Previous to that, they're recorded on the cash flow statement as cash leaving the company and inventory coming in. And then when they get sold, it's inventory going out, it's revenue coming in, and a cost of goods associated with that sale. So if it costs them $30,000 to make each one of these vehicles, they're not going to have to expense all 433,000 they produced. They only have to expense the 386,000 that they deliver. The rest of it they account for on the balance sheet, on the cash flow statement, and then when they sell it, then they account for it on the income statement. I hope that clarifies things for Tesla stock investors. Now, in terms of earnings per share, the analysts on Wall Street that are following Tesla stock, they think it's going to deliver 51 cents in earnings per share when they report their current earnings. That's down from 54 cents they expected 7 days ago, 63 cents 30 days ago, and 79 cents 90 days ago. So Tesla's earnings per share expectations have been revised lower and lower and lower again for the upcoming quarter as Wall Street becomes more aware of Tesla's troubled demand environment. Now, those earnings per share come as the company is struggling with falling EV demand. And I shared with you that their delivery numbers were down year over year. And normally that wouldn't be such a bad thing. But when you add to the fact that Tesla's been slashing prices on all of their models, that makes that look even worse because you're cutting prices several times, right? At least 5 times they've cut prices. I lost count how many times they cut prices. And still, your sales are declining. That makes it look worse because you've got falling prices and falling sales. But it's not just Tesla that's cutting prices. According to new data that came out, EV prices are down 18.3% in April of 2024 versus April of 2023, while non-EV prices are down 13.1%. EVs are faring much worse than non-EV cars. The whole car industry is normalizing. Remember when car companies were selling vehicles at 10, 20,000 above MSRP during those supply chain shortages earlier in the pandemic? Those days are gone. Inventory is building up, and these car companies are having to slash prices to make sales. It's not a good time to own a car company. It's not a good time to be an investor in a car company, especially an EV company. And Tesla can tell you several stories about that. So I mentioned already, deliveries are down, right? And they slashed prices. And so that's going to hurt profit margins. Gross profit margin for Tesla peaked at around 29-30%, and they've been falling since those peaks. It's now down to 18.25% in the latest update. When the company announces earnings, I wouldn't be surprised if this moves lower. In fact, I would be shocked if it doesn't move lower, because the combination of slashing prices and lower unit sales is always bad news for gross profit margin. So I would be shocked if this is not significantly lower, closer to 14, maybe 15%. It could be much worse than that. I wouldn't be surprised if it approaches 10, 11, 12%, to be frank. It's not going to be good for its gross profit margin. Now, Tesla will try and tell a story in the earnings report for investors to wait for August 8th, when it's going to make an announcement regarding its robo-taxi, but that's a little bit far away. I'm sure Tesla is going to get questions from Wall Street analysts about that day, about what they're going to announce that day, what investors can expect from that day, because a lot of investors are keyed up on what Tesla can deliver on robo-taxi, because regular car sales, EV sales, are struggling and they don't look like they're going to turn around anytime soon. And so Tesla's got to feed investors another story, another reason to keep them engaged, because right now it's not looking good. Now, Tesla stock, of course, I mentioned it's down 41% year to date so far in 2024, and it's now trading at a forward price to earnings of 38. Still, if you compare this forward price to earnings to other car companies, Tesla's like 3, 4, 5, 6 times more expensive than Ford, Stellantis, GM, and other legacy automakers, right? It's one of the only EV companies that's profitable right now, and so it deserves a premium valuation, but it's still more expensive than those companies. And if you compare Tesla to tech stocks like Nvidia, AMD, Microsoft, Apple, Alphabet, Meta platforms, Tesla is still more expensive than all of those companies I just mentioned by a considerable margin, by at least 33%, and more if you compare to others. I believe it's roughly double the valuation of Alphabet stock. So just to paint a picture of the stock price declining, but the valuation still being expensive, because Tesla stock was so expensive to begin with. There was so much enthusiasm for Tesla. Investors jumped into the stock and soared valuation. Investors didn't mind the explosive valuation because they were looking forward to what Tesla could be 5, 10, 20 years from now, with little evidence to show that progress. Still, if you're thinking about Tesla stock, if you're thinking about investing in Tesla stock, I would caution against investing before the company announces earnings. So heading into the earnings results, I would say Tesla stock is not a buy. And then after evaluating the earnings results, I will update that recommendation. If there is significant information that comes out regarding the lower priced model, if there's information that comes out regarding the robo-taxi, Tesla recently cut the price of its FSD, full self-driving software, by half. If there's some information regarding how many customers purchased the FSD upgrade since it made that announcement, if there's positive information regarding the Tesla truck, all of which could change my opinion on Tesla stock. But I need to find out more from the earnings results, because as it stands, I have zero interest in Tesla stock at these valuations. I feel it's too expensive. So I need to see the earnings. I need to see the information regarding those critical components about Tesla's business, and then I can update my recommendation then. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.